We'll just do a quick one. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Happy Monday morning. Did actually a pretty long daily brief with the good people. And welcome back. Probably have this relatively short. Let's just see if I have the right screen up here. There we go. So a quick overview. Bonds starting to get overbought again, which is a little scary because it kind of feels like we're waiting for the reason why the Fed bazookas would come out. And we're starting to get word that things like hedge funds are starting to collapse, margin calls, stuff like that. But I'm not seeing the backdrop for a justifiable Fed bazooka to go off in the market if the bond market is strong. So if the bond market is kind of, it had a huge rally. We showed you, I don't know, a week or two ago how it was very washed out. And so the bonds had to rally, and they have. Now they've actually gotten, technically overbought, which is scary. And you can see how embedded they are to the upside here. Really, if they start ratcheting back down to the downside and the stock market is heading down while hedge funds are trying to clean themselves up, then that might be a potion for Fed bazookas to finally go off. Because that's sort of what I'm waiting for here. And I don't know how long this process takes. It might take a month or so. And also, too, I understand Europe's right in the middle of sort of their third wave lockdown. I'm hearing that New Jersey and New York are just going over the top on cases again. It's getting a little dicey out there again. So try and stay safe and all that kind of talk, as they say. Breadth-wise, I'm not overly impressed. We'll say, though, I do really like this idea that crypto's a nice leading indicator here in the marketplace. And what I've noticed here is our message of late has been through sort of the weekend, kind of dead cat bounce kind of idea, rallying back up into moving average resistance on the short term, very short microcosm term. And now the question here is, can we accept and actually start to seriously think about coming up and testing this slow moving average on the breadth? You can see the little W that just came in here. I mean, it's sloppy. I'm not going to sugarcoat it. But nonetheless, have noticed that, Bitcoin is actually in crypto, specifically sort of that DeFi space and, all the various fun coins that have been really rocking it here lately. They actually are the ones that are catching a bid first. Some stocks in the stock market are getting really hit hard here. That hedge fund story over the weekend, I was showing some of the people on the site today. I mean, their charts are getting they're getting hit hard here. Interesting thing is that sort of setting up a scenario where those particular markets now are, kind of washed out. They and this is what I'm worried about for the broader market. Everything is just uppy, 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 right? And this, I don't know whether I should show it. Actually, I think I have it on my stock screen. Viacom was one of the stocks that got hit. This is what I'm worried about, folks, is at any given point in time, all of these markets that have done these insane nutso moves, they can get whacked. And really, all this is doing is just bringing the market back down into mountain man level. We're not even at line in the sand and Kavarkanator levels where these guys want to buy. We're just now at mountain man where he's thinking about buying. And there's the 200 period moving average keep you honest indicator. Right? And then there was another one, I think it was Discovery. And these just so happen to be the U.S. listed in this particular fund that got liquidated. From what I understand, they had a whole bunch of Chinese stocks as well, so they're probably all getting hit. But you can see the original double bottom back here. So why would you be buying this asset up here? Does that sound a little familiar, you crypto fans? And these people, anybody who bought up here, they're dying 1,000 deaths now. So just understand, this shit happens all the time in the market. And the market is asset agnostic. It doesn't really care. The most important thing you have to learn if you want to make money from trading, and I don't know if you even really want to do that, but what you have to learn is, for God's sakes, don't chase, don't chase, don't chase. Reload zones. You want to do something like a 200 period moving average. Keep you honest indicator. And I'm just going to show it to you. I'm not saying it's going to happen, but you just all need to acknowledge this. 200 period moving average. This is where is the low? There it is, all the way down there at $3,000. I mean, it's shocking how crypto kids won't acknowledge the fact that in less than a year, this damn asset has gone from like $4,000 up to like 50, 60 G's. Oh, well, this is where it was supposed to be all along. Oh, okay. There's Mountain Man. There's 200 period moving average. Just like I showed you on these other ones. I'm not saying it's going to happen, but you have to understand that this happens all the time in the market. This is not unnormal. This is actually normal. And is why I like the reload zone concept. So that's the context of the market right now. Like I said, if they want to try and keep the broader market happy and keep this Fakezi going, this is ridiculous as far as I'm concerned. But there's no reason why the stock market can't do the same damn thing I just showed you as that Viacom and Discovery. Lots of gaps to the downside. No doubt about it. The difference with this asset, of course, this is a measure of the broader market, is that it's not just one particular company. If I understand correctly, that one hedge fund had large positions in those assets and they needed to be liquidated, and so boom, they were liquidated. Question this morning was going to be, what were we going to see sort of follow through? Were we going to see spillover selling? Was this inertia going to get out of control? And I think that the message from the central bankers was that they will do everything in their power to support the market. But if the bond market is strong, and this is like the Canadian bond market proxy, and we were rallying all of last week, well, Fed's not going to come in and buy an up market. Or if we look at the U.S. bond market, same sort of thing. Market rallied up. Fed's not going to come in and buy an up market. They will only come in and support this market if it's absolutely collapsing. So as I showed you with that breadth indicator, this is getting concerning to me. In that we now have the bonds nice and overbought again. And they can now dump and forge new lows. Which might mean that, risk on sort of stays up top here and is well bid. But if this starts getting out of control to the downside, look at the utilities. That utility breadth indicator, that almost has me to the point where I got to go shopping for some sort of utility index and actually seriously look at a put option, because that looks really interesting. And probably if we look at our bullish percentage index, it's probably already breaking down. Yeah, you can see it's already broken down. Gee whiz, overbought, just got a sell signal. Bullish percentage is already working lower. Oh boy, that looks troublesome. And that's basically in the bond market. So I've said all along, I think that this next market's floor comes in when the Fed fires its next bazooka. And really, it's our job. We got to sort of wait and just sort of let that bazooka get fired. Once the bazooka's fired, then we know a floor's in the market and we can start going and getting apeshit gambling again. Until that bazooka is fired, you have to expect that something like this can happen out of nowhere. Boom! You just have to expect this. It's just the way the markets are. And I try to teach people in the public the easiest way for you to think about price action, especially if after you've had a huge move up like this, is what we should at any given point in time is expect 38.2 retracements. It's interesting how lots of gaps in here. That is old key support from last summer. Last fall before the election. Could we pull back down into these support levels? Sure, why not? It's a risky market, no doubt about it. If, however, Fed bazookas go off up top here, and the Fed comes out and says, here's a whole bunch more free money, well, the speculators will jump right back in there and they'll start bidding prices up again. And what I do find really interesting through all of this conversation, you can see most of the economy is not feeling very good. Even like, where's the Kathy Woods? Let's see how the crazy mutual fund kick-ass killer traders are doing. The mutual funds are getting smoked here today. What the hell? I thought this was a rise-only market. Same thing here. You can see where reload zones are. Why are you buying this here? And for God's sakes, don't chase, you crazy idiots. So at least we're coming back to the keep you honest indicator on this one. But really, I wouldn't be a buyer until we get back down into here. This is one that I wrote up, same sort of thing. I like the fundamental story here. Great story. Just reads so beautifully. It is the future. But so what? That doesn't equate to the price that you pay for the asset and your investment. The two don't go hand in hand. I mean, ideally, what you would like to do is concentrate on good fundamental stories and then try and apply some let's go find a W kind of thinking. So as you can see, I'm actually more than happy to be a buyer where this thing originally bottomed, but I'm not going to be a buyer here. And as you can see in the stock market, there's a lot of red. Interesting, even like out of the metal stocks. Tell you these damn forestry stocks, and I think I told you recently, like we have a key reversal screener on this website now. This information here, almost impossible to find on the internet, and yet what a beautiful example of a key reversal. And look at just, I'm a bull, get the fuck out of my way. Just incredible. And that's a forestry stock, that commodity picture I showed you. If the commodities start cranking higher here again, the bonds are not going to be happy at all. One part of the market, though, like I said, that's sort of bucking the overall trend is, hey, look at that. We actually got a little bit of green going on down here. And Mr. Novogratz, I mean, the stock's up and down like a horse drawers, but Mr. Novogratz, he's like in the spotlight right now. Everybody's in love with Mike Novogratz. Novogratz says moon, so we go moon. Terrible, I know. I can't sing. Don't quit your day job, Brian. But good to see, actually seeing a little bit of strength. I mean, there's certainly no buy signals here. We're basically right up at the top end of ranges, maybe filling in gaps. I'll be curious to see how we act up in here. I thought maybe there was a cup and handle on this, but that fell apart. I guess we had a nice mountain man tag there, so this would mean trading range. The big ETF hasn't broken out to new highs. Really messy, choppy, gap-filled, hold-filled chart. Really not in your best interest to try and trade this thing. It's a fund. You want to invest. Not a bad idea. Sell half on double, whatever. Day trading these kind of things? Ugh, what a mess. I mean, beautiful head and shoulders top breakdown, but they gap it open and what, you get filled here? Ugh. It's horrible. So I don't think it's a good idea to try and trade these things. They're just too sloppy. But, position trade, swing trade at best. I think you can bang out doubles and stuff. But, if you're going to be trading, day trading, lower time frame, trade the futures contracts, right? Suppose you could fudge it by doing the forwards within the crypto industry, but I wouldn't try and trade these things. It's SpaghettiOs. These kind of stocks, I think you just got to avoid them. Sucks, but, this stock was like 30 cents a share where you were supposed to buy it. And like, all of us, we all had a great time trading this. The problem is we ended up taking profits on these kind of moves, not even thinking that this kind of shit would happen on this. And this, I think specifically, we were in options. I bought this stock, and I'm proud of myself for just sticking into the trade and not doing anything. But how can you possibly come in and think about actually investing in a name that looks like that? You can't. It's just asking for trouble. Oh well, that is what it is. So, I suppose bringing this whole thing full circle for you guys here. I think I put out a tweet recently. My number one job here has got to be just don't get in the way of that US dollar index. I've got 2023 call options. Maybe it's 2022. My job, just don't get in the way of this. Just let it do its thing. Stock market, as we said, sort of floundering up at the top end of its range. Starting to get some warning shots that there's trouble out there in the world. VIX guys, they're super, super long the VIX right now, so they're incentivized to get the stock market to come down a bit. Interesting, look at the war going on in crude oil right now. Just an absolute war. Back and forth, back and forth, back and forth. Looks like the bulls are trying to take over here. And if we're back in that, bonds crapping out, interest rates heading higher, commodity prices ratcheting higher, then really we should expect that crude to head back up top. Again, can't really even think about investing in this. Look at that crazy ass chart. I mean, it's the same thing as almost anything that's a risk asset in this market. Just ridiculously overpriced. And they often say, right, the market will remain illogical far longer than anyone can remain solvent. I might argue that this, last year going to like minus $30 a barrel, then coming right back up here, and the spot market trading up $60, $70, $80 a barrel. This market is completely illogical. There's no logic to any of this at all. It's just these damn Jupiter-Saturn cross. Central bankers are trying to make sure that they pull off the con job and devalue the currency by 1/10 so that they can run the economy and do their funny little inflation con, basically banker's tax, for the next 40 years. I mean, that's what's going on right now. Sometimes through these transitions, the bankers lose control. Abraham Lincoln, Andrew Jackson, one might even argue Ben Franklin. It's kind of a pure irony that on the Federal Reserve notes themselves, the actual people who fought the bank the most are the people that they've put on the faces of these Federal Reserve notes. Isn't that kind of a funny twist of irony? Why is Andrew Jackson on the U.S. bill? Well, I know why, because the bankers want to sort of laugh at him from history. Well, Abraham Lincoln's on the bill. Same thing. Ben Franklin's on the bill. It's funny, Ben Franklin, when he was over in England, people asked, why is there no inflation over in the colonies? Why is the economy so strong? And Ben Franklin said, well, because we don't use your currency. We use what's called Confederate script, where it's issued by the governments. And it's very tightly controlled. And when the amount of script outstanding is all bought up, well, then the economy just slowly contracts. And when there's a surplus of script in the marketplace, well, then the economy bottoms and it starts to stabilize again. And the bankers in England were absolutely aghast at what they heard. And you might even argue that half of the reason why the American Civil War or Revolutionary War started was the bankers were like, we have to put a stop to this independence now. And they started to enact just some insane taxes on the colonies to try and bring an end to this independence. And of course that forced their hand. So, this is, hundreds and hundreds of years, probably even millennia, right? We can talk about stories about Henry the First and the inception of tally sticks as a way to get control of these goddamn bankers. That's 1,000 years ago. Same conversation. So, as I said, I think what's going on right now is there's not really a hell of a lot of logic in economics because the banksters are trying to make this transition into the next cycle, and they have to pull off the con job and get society convinced that governments have to issue tons and tons and tons of new debt and quote unquote grow the economy through the issuance of new paper, which we don't really need. There's plenty of money out there. The only problem is there's so many bad debts, there's so many bad loans that if we actually held those people to account, they should all go bankrupt. And ironically enough, probably half of the banks themselves should technically be bankrupt. And of course, we won't want to let that happen, because if that happens, then all of the 1% that owns those bank stock shares, they would lose money, and we couldn't let that happen. So that's sort of economics in the modern era 101. And if anything, it's probably good that this message gets out over and over and over and over, where we finally, maybe as a society, start acknowledging this banker's tax, and actually see if we can work towards ways of getting rid of it. I doubt it, but we'll see how it goes. Anyway, trying to make sense out of 2021 with the banker's tax reset going on. Good old Klaus, good luck. My suggestion to you is don't get sucked into the debt game, because it's a trap. It always is, it always was, it always will be. Neither a debtor nor a lender be. Just don't get into that business. If you can't afford something, don't buy it. It's pretty simple. If you do that, and probably if you do have assets, try and go and buy hard assets. Try and go buy like maybe land. Try and go buy, maybe a brick of gold. I'm still not overly convinced about this cryptocurrency space, and especially if these cryptocurrencies are trading substantially higher than the cost it is to produce them. I don't know whether I really buy this argument. But that's just me. So fucking what? It's just one market participant. If I can buy cryptocurrencies, Bitcoin, at or near cost of production, same logic as going and buying hard assets. It's interesting, as we were getting the video going here today with Kevin, it was sort of like, why would you want to buy a government bond right now? I was joking in the Broiler Chicken show yesterday about the O'Hara family and buying Confederate bonds and what happened at the end of the U.S. Civil War to Confederate bonds. Sadly, I wouldn't be surprised if the end game of this bad debt world is something along those lines. And whoever the winner ultimately is of the next sort of manufactured Civil War, the clause in their funding by these banksters will be, and the winner agrees to honor the debts of the vanquished. Then they'll start a whole new debt system. They'll start a whole new cycle. Or maybe, just maybe, but I doubt it, but just maybe, the people can actually stand up and take control of their money supply again. But I doubt it. So, what's your backdrop here? What's the message of today? Really simply put, looks like risk is trying to rally back up against the top end of its range. I think that market is hoping for more Fed bazookas. If Fed bazooka goes off, then I think it's a green light for risk assets to move higher. But I think the market is waiting for that. In that sort of interim, we're in sort of the part of this 4 or 5 year crypto cycle where it's sort of like the face rip part of the cycle. 13, 17, 21 now, where there actually should be quite a bit of money to be made in crypto. But, going and buying Bitcoin and expecting another 10x from here, I don't know about that. But a lot of these little altcoins, these people are making a lot of money on these things very quickly. We were just looking at a couple of these little shitcoins. And I get the impression it is like the shitcoin market now. I mean, you can play around in Bitcoin if you want, but look at this little piece of shitcoin. Storage. And this is priced in Bitcoins. You went and bought your storage there on, what letter of the alphabet does that look like? A Beamish guy trying to get you to buy W's? And look at that move. What is that? From 1,400 hit a high here of 6,600. And that's just since the middle of March. Did Bitcoin go up 5x in that time period? I don't think so. So this is actually the sweet spot of the market right now. Can't chase. This is just exactly like Doge. Doge was just a month or two ago. And it's kind of funny watching... I thought Mr. Elon Musk had a bigger dick than everybody else. Looks like his dick's getting a little bit limp. I don't know. Point here is, don't fucking chase this. That's ridiculous. This is a weekly chart. Let's put that to a daily chart so you see how bad this is. Like, Doge army stays strong. Why? Who cares? What I would say is, fucking A, make a pile of money. Then maybe go and find another new name that's putting in these W's down here. And maybe, if you got a free position in this, great, wonderful, awesome. Free is free. But there's nothing to do here. It's boring. Go find a new name. Right? New W's. New momentum. New... in fact, actually, we were joking today. I think the next trade seems to be pornography coins. So, where was that one? Good old Romano. I don't know, any of you crypto old-timers, probably none of you watching this video know who he is. But good old, look at this. I mean... letter of the alphabet. Now this big honking letter of the alphabet. I mean, maybe reload zone this kind of shit. You tell me, has this thing got any room to move up here at all? Those are the kind of names I want you looking at. Not Doge that's already up at the top end of its range. So, don't be surprised if you see Romano's out eating more wonderful ass. And this thing's pumping up into, wicks and tails like to be eaten. We could do foggies off of this. We could do reload zones off of this. Where's first stop target? I mean, hopefully you've seen these charts so long, you know what's going to happen here. So, interesting to see that. And I think I remember some site people were getting jazzed about some of the other pornography coins. Remember I was telling you about Geo, my old buddy Geo. And Ubic. I mean, look at that move. Just even when I was talking to you guys about this just a week or two ago. That's where the money is being made in crypto right now. I mean, what is this? 740 some odd sets, and here we are. We hit 2,000. That's a 3x. Just in what? Less than a week? Did Bitcoin just triple in price? I don't recall Bitcoin tripling in price. So... you want to make money in crypto, this is the markets. The shitcoin tastes great. Well, not really, but oh well. All right, so there's your report. Blah, 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 blah. Not overly impressed with the corn. We're back actually into a shorting window, and we just hit a couple really important key fog and bomb levels, so it doesn't surprise me seeing a bit of chaos come in here. Broader junior market, blah, not really a hell of a lot going on. Blah, blah. I'm worried about the bonds getting ready for another leg lower. But if we get that next leg lower, maybe that's what brings the Fed bazookas out. And, of course, gold looks the same thing. Blah. One thing I did notice about the junior golds, and this is one reason why I love the VCIM model, is you're not necessarily buying the gold market, but if these VCIM stocks happen to go into the gold industry, well, that's cool. But it's an added bonus. But look at these. Like, this is a metal stock. Well, and actually they just spun off a iron ore proxy. So I actually got free stock out of that. But anyway, that's here and there. But, after the spin-off, iron ore business, that's pretty exciting. Come on, you. Anyway, so there's your market. Kind of boring. Not really much to do there. Like I said, we just got a big whack of stock spun off. But you fucking jugga. That guy's still pretty strong. Timberline actually pulled back, sort of anticipating maybe a bit of that weakness. So I guess we're starting to see it a little bit. Now, you could actually make the argument back into reload zones. This thing might actually become viable soon. Been wanting to buy these little two guys. Just been waiting patiently for the price to come down. So they're starting to come in. LAD, which I love this stock, but kind of bucking the overall trend in the gold business. And you tell me, any room to move up there? So sometimes with these VCIM names, it's actually a good place to sort of hide out while the rest of the broader gold and metal markets are just not doing much. But nothing really to get excited about here today. Actually, you know what the trade that I love right now is I went and bought some Lockheed Martin. Woo, boring. Guns and butter. Guns versus butter. So we bought the guns in here, and the guns are treating us well. But what was really cool about this was... I don't know why I did it. Sometimes I get so fucking lazy. But I was looking at the options, and man, there was just the kick-assest option. I've been talking too much today. I'll leave it at that. Anyway, guns and butter. So looking for good old, probably, $390 a share, long from $340. So yeah, I'm up a nice... was about 10% on the equity itself. Just let it go. I'll let it run. Looks like it's a nice trade. And I like this kind of trade because the Democrats, historically, they love to spend money on defense spending. So, doesn't surprise me. These kind of guys, they love it when the Democrats take over the White House. So, actually, you know what? I think you can draw this off of... Whoops, that's not what I wanted to do. Off of here? Yeah, that's actually more accurate. Oh, nice. So actually that lines up perfectly. Foggies, top of the channel. Nice little gap to be filled in, but probably up against these highs. Anyway, it doesn't really matter. I'm just talking out loud now. Okay, I think I'll leave it at that. I hope you got some edutainment out of that. I'm a little bit leery about getting too excited about the corn right here. We're coming back up against resistance here. So if anything, our market message recently has been sort of consolidation, dead cat bounce within the bear context. And now if you're actually a bull, now is when you need to see the bull step up here. And I'm not convinced, right? There's no new highs here. There's no new highs here. So if you are really a bull, okay, fine. Go and break out and let's see new highs, and then away we go. But until then, maybe just be a bit skeptical. So, okay, stop talking now, Brian. Have yourselves a great day. All the best, and bye for now.